Today on Market Vision, we're going to talk about one thing that is on everyone's mind. Most financial advisors aren't talking about it. We'll talk about why most financial advisors are not talking about it. We're talking about Bitcoin. Okay, so we're going to talk about both the bull side and the bear side. You see, I'm holding currency here, 10 bucks, big spender, right? But seriously, Bitcoin is supposed to be the cryptocurrency of the future, the currency of the future. Everyone's supposed to be gravitating. The world is going to gravitate that way. And so the argument is that for Bitcoin is that, first of all, it's part of the blockchain technology. It's part of this massive leap forward in data holding, data transparency, data consistency. And when we apply that to currency, we get this magical currency that should hold value apart from the devaluation of hard currency. You see, we all know that hard currency has to devalue over time. Why? Because that's the only way politicians get away with spending more than they're taking in taxes. They mandate, they create a situation of inflation so that 20 years from now, 30 years, 40 years from now, the money they borrowed to buy off today's voters is cheaper to pay back. And so you get this consistent devaluation of currency over time. And it's not just the United States, it's every currency. And the big challenge is when you get places like Venezuela, where the devaluation of currency is accelerated and it happens very quickly, and people go from rich to poor very quickly because the currency is devaluing too fast. That's what all governments try to avoid. Most of them eventually lose track and lose control of that runaway snowball. The argument for Bitcoin is that Bitcoin will be a repository of currency value that stands apart from those government structures. So there's no indebtedness of the economy. There's no changes in the political spectrum. There's just this transparent blockchain technology that would become a repository globally relative to any individual currency, because it would stand apart from any of those currencies. And so that's the argument for it. I can also tell you why, at least in the near term, Bitcoin should continue to appreciate in value for a whole variety of reasons. All of them come back to supply and demand, that magical market supply-demand dynamic that Bitcoin is not disconnected from. So let's talk about why Bitcoin should appreciate or zoom up in the near term. And I don't mean even this week or this year, I mean over the course of the next 10 years. Here's why. Here's some reasons why. Number one, there are a limited number of Bitcoins. Almost all of them have been found. I think the number of remaining to be found is something like less than 1,000 at this point. And so as more money continues to pile in, a la more demand, limited supply, prices rise, right? Pure supply-demand dynamics. It's actually worse than that, because the market, the investment bankers, aren't going to let the limited number of Bitcoin change the demand dynamics. They're going to create artificial tracking indexes. Latest one is being put out and advanced by Anthony Scaramucci. You remember Mooch? Mooch was Donald Trump's he was the guy, the talking head, for about 2.5 weeks before he got caught dropping F-bombs in the Oval Office or something. So that's the guy who's out right now talking to the SEC, trying to get the SEC to let him open up a Bitcoin tracking index that doesn't actually own Bitcoin. It just tracks the Bitcoin valuation by an index. Here's the problem. There's one of those things that exists today. It's valued at about 250% of what the underlying Bitcoin is worth. Why? Supply and demand dynamics. Supply and demand is not suspended magically just because it's a cryptocurrency. And so as the market, as the investment banks create these investment vehicles that are supposed to mimic or track Bitcoin, the supply demand dynamics now get applied to that artificial index. And so now you have the publicly traded asset that's supposed to track the underlying Bitcoin, and it's run away 250%. It's trading at 150% over the actual valuation of the underlying Bitcoin. And what do you have? You now have the Anthony Scaramucci's of the world trying to create more of these indexes. Why? Because if we create more supply, it'll match the demand. Maybe if you're talking about eggs and chickens, you're not talking about a real asset. You're talking about a cryptocurrency that doesn't actually exist. There is no actual hard asset here. The problem we have using Bitcoin as an investment is if it's a currency, it's supposed to be a repository of value. If it's an investment, then there should be an actual business model, there should be hard assets, there should be earnings, income, dividends. They should pay us to own it. And Bitcoin doesn't have any of those things. Bitcoin is this manufactured cryptocurrency that resides in wallets. By the way, 95% of all of the Bitcoin in all of the world reside in 2% of the wallets. So put that another way, 5% of the Bitcoin is being traded by 98% of all the people who have Bitcoin wallets. So 98% of all the buying and selling is happening with 5% of the Bitcoin. Massive demand, little supply, crazy price appreciation. So the reason financial advisors aren't talking that much about it is because we're limited to what are actually approved, regulated investment vehicles, and there are none. There are none that are approved for most of us. There are a few organizations and institutions that are buying up that contributing to the demand on that one index out there right now that kind of tracks Bitcoin. But again, 250% of the supposed underlying value, and the underlying value is completely driven by the bigger idiot doctrine. Bigger idiot doctrine meaning I'll buy it today at an inflated price in hopes of being able to find a bigger idiot tomorrow to sell it to. So you can hear there's a bull case for the capital appreciation, for the limited supply, massive demand, prices go crazy. You can see that. That's not a pure repository of value. That's not an inflation adjusted currency. That's a capital appreciation bet, right? What do we talk about when we talk about capital appreciation? You can't eat it. It appears in mountains in bull markets. It disappears like gorillas in the mist in bear markets. And rarely, if ever, can you actually put it on a plate and eat it like a steak. For you vegetarians out there, tofu, right? Actually, sorry, had great tofu meal over the weekend. Anyway, Bitcoin is this fascinating thing. I know this has run really long. I encourage you to bring this up in your conversations with your advisor or with us if you have questions. I can certainly, I think you can hear, I can make the bull case in the short run. I can't buy it for you. If you want to own it, you're going to have to go get a wallet and buy it yourself. But I can have the conversation of the bull case. I can also give you the rationale behind why Bitcoin should be expected to continue to be a very volatile asset for a very long time. because the supply-demand dynamics are such that it's going to create volatility, and it's still not going to pay you to own it. So I hope this is helpful for you. As always, here at Visionary Wealth Management, we're here with perspective for the decisions ahead. Don't hesitate to reach out or call if you have questions. Take care.